Simon, I want to ask you about corporate governance because I know UBS has a big focus for its clients on sustainable investing, ESG. When you talk to your ultra-high net worth clients, of the E, the S and the G, are they more focused on anything in particular, or do they just want to have more sustainable investments in their portfolio and leave the details to you?
Well, I think it's a multi-part question, but I think what's very noticeable in terms of types of conversation with the clients, even going back 2 or 3 years ago, there were a proportion of our clients who wanted to exclude bad companies from their portfolios. There were a small proportion of clients who were interested in investing in highly rated environmental, social and governance companies, and a large proportion of investors and our clients who wanted to do neither of those. But what's evolved over the last 3 years is a much more nuanced and advanced, I'd argue, approach to sustainable investing. Rather than just excluding bad companies or just putting in good companies, being able to invest in strategies which benefit from companies that are improving their environmental, social and governance capabilities and being re-rated while doing that. Being able to invest in the debt of the World Bank rather than treasuries. Being able to invest in green bonds, a rapidly expanding market. And so the conversations with the clients are becoming, A, much more widespread and also much more holistic. It's not just about trying to add bits of sustainability into a cross-asset portfolio. Instead, there's a lot more interest in actually having 100% sustainable investing cross-asset portfolio, something which in its DNA, if you will, is sustainable. And so we worked on this. We launched a 100% sustainable investing cross-asset portfolio at the start of the year in Switzerland, 2 weeks ago in Asia, and the demand has been incredibly strong today.
Fascinating. And Simon, how much does gender lens investing matter in all this?
It does. It's clearly a thematic environmental, social and governance strategy. And actually investing in companies with much better gender diversity, both at a management level and more broadly across an employee base, does over time, or has been proven over time, to lead not only to a improved social outcome, but more importantly, from an investment perspective, actually superior investment returns. And hence, that's actually, again, an allocation within this 100% cross-asset portfolio we've rolled out.
Yeah, Simon, it's interesting you say that because we're showing a chart right now on TV of the Bloomberg Gender Equality Index and shown how over the past year and even going further back than that, it's been outperforming the S&P 500. Now, is that to do with the performance of those companies, do you think, or is it a sort of self-fulfilling prophecy because there's a lot of focus on sustainability, so people are investing in that more now?
Well, it's interesting. I mean, I'm at our Wealth Management Investment Summit. There's 11 trillion of assets represented here. It's the 7th year we've done this in Davos, and in fact, the 7th year that we broadcast with Bloomberg from this event, so thank you. What's really, really noticeable this year is how much focus there is on sustainability. And not just from a wealth management perspective, but also an institutional perspective. So we had our opening asset allocation panel yesterday talking about macro views. Every single panelist at some point during that hour-long panel talked about growing demand from institutional investors with respect to sustainability and their growing belief that incorporating environmental, social, governance and sustainability aspects into their investment processes wasn't just the right thing to do, but it actually added alpha and financial performance. So to answer your question, I think it's probably two things. I think it's the simple notion that greater diversity, be it gender, be it skill set, background, age, all management texts tell you that should lead to better operating performance. And secondly, the greater focus on sustainability potentially also leads to those companies seeing a re-rating relative to the market in their shares.